week, I explained that in a silver short squeeze like we're experiencing now, strange things can happen, and I'm afraid that a top in this cycle for silver will be around $300, $400, $500. And why $500? Because you, the the traditional ratio, gold silver ratio, is 1 to 10. So silver being 10 times cheaper than gold. Well, gold is trading around 5,000 or over 5,000. In a 1 to 10 ratio, silver should be trading around $500. I wouldn't be surprised to see a much higher price for gold in a revaluation scenario where central bank need a much higher gold price because, as said, it helps them for their balance sheet. And then you could think about 15 or 20K.
Silver prices could be entering an extraordinary phase, according to long-time precious metals investors. In a potential silver short squeeze, extreme price moves are possible, with some analysts suggesting silver could reach $300, $400, or even $500 per ounce. This outlook is based on a historical gold to silver ratio of 10:1, implying that with gold trading above $5,000, silver is deeply undervalued. Renowned investor William Middelkoop has also discussed scenarios where central banks revalue gold to $15,000 or $20,000 to repair balance sheets. Such a revaluation would dramatically reprice silver, signaling a profound shift in the global monetary system. Now, we present the clips from William Middelkoop's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Silver hasn't been trading at new all-time highs till December last year. We had this triple top around $50 per ounce. And once we broke through the $50, it was quite certain for me that we would see a run towards $100 in months or quarters. And that's what we have seen now. Many people expect this to be the top. Many in the mainstream media call this a bubble. But during my talk here in Vancouver this week, I explained that in a silver short squeeze like we're experiencing now, strange things can happen. And I'm afraid that a top in this cycle for silver will be around $300, $400, $500. And why $500? Because the traditional ratio, gold silver ratio, is 1 to 10. So silver being 10 times cheaper than gold. Well, gold is trading around 5,000 or over 5,000. In a 1 to 10 ratio, silver should be trading around $500. I don't have a crystal ball, but I'm quite surprised by the speed of the rise of silver. I had expected a run towards $100, but later this year or maybe even in 27. And the speed of this move tells me that we're very early in this short squeeze. And if I look at the numbers of the open interest on the COMEX, so the paper contracts, the future contracts in silver, the amount of open interest is still that high that we need 140 days of world silver production to cover that amount when it would be totally physically settled. So that tells me that we're in a very early part of this short squeeze. I think the same goes for gold. So as an investor, I'm the fund manager of the Commodity Discovery Fund. So as an investor, we always look for where's the bottom, where's the top, where are we in the cycle? Well, we came from a very long bear market in our space. And I think we're just in maybe the second or the third inning of this whole recovery process in the world of commodities. And I think prices have a bit farther to go. And $500 sounds outlandish, but that's only 5x from this point. And that's the same rise as the rise we've seen from $20 to $100. I said that my target is $500 based on that old historical ratio. And because of the speed of the current squeeze, if you are in a short squeeze, and we've seen that with some of the GameStop stocks, or we've seen that in the nickel market. The moves can become very violent. So we've seen that in the last few days as well. Silver went up from 90 to 120 in just in a few days. So it's very hard to predict precisely what will happen, but a in an in a extreme short squeeze scenario, we could see prices of silver rising to two, three, four, even $500 in maybe a month. What I do, what I try to say is that in a short squeeze scenario,
That
which
could
we
happen.
currently, currently we have this short squeeze scenario, and if this short squeeze scenario becomes more serious, and we see more stress building within the system, and more institutional players who are having trouble to source their physical silver, we could see a spike leading to those numbers in summer. I'm not predicting that, but it's a possible scenario.
Silver's breakout above its long-standing $50 resistance marked a historic shift in the precious metals market. After years of forming a triple top, silver surged to new all-time highs, confirming the start of a powerful new cycle. According to investor and fund manager William Middelkoop, with gold trading above $5,000, the traditional 10-1 gold-silver ratio implies silver could reach $500. High COMEX open interest and limited physical supply suggest the squeeze is just beginning, with potentially violent price moves ahead. Let's get back to the interview.
Gold might become more important because gold has been a central element of central bank reserves for centuries. And the thesis of the big reset was that we would reach a point around 2020 where the dollar would use its sole role as the world's reserve currency, and where gold would gain momentum, and we would see a revaluation of gold to a much higher level, which would also support central bank balance sheets worldwide, because central bank balance sheets, of course, have been become quite unstable because of all the money printing we've seen after the Lehman crisis in 2008 and the COVID crisis. So in a way, this is all connected. And because silver is such a small market and it's poor man's gold, once you have this huge demand for gold, where gold becomes more important as in a monetary way, you also see a follow up in the silver markets, and that's what we're seeing now. And because these silver markets are so small, you get a more violent move in the silver market compared to the gold market. I always predicted in the big reset that we would see a revaluation of gold and silver by market forces or organized by central banks, pushing the precious metals to a much higher level to help support their balance sheets. I think we're now in the short squeeze where market forces are leading to this repricing. And during my talk, I called this the start of the metal wars. I think we're entering a whole new era where not only the precious metals, but also critical metals like copper will be repriced to a much higher level. We see the same for uranium. This is also this has also to do with the supply and demand around 2030, and that's only a few years out. And after 2030, we will see almost permanent production deficits in many of these metals. And this also explains why the US has put 60 of them on their critical metals list. So there's so much at play here that when we do presentations for new investors, we always say this is now like a perfect storm, not only for gold and silver, but for the whole commodity space, because you have the debasement of currency. That's why investors are fleeing towards hard assets, and gold and silver being the hardest of all. Then you have the geopolitical tension, where commodities are being weaponized. And then you have the huge central bank demand. They're preparing, I think, for a monetary reset. That's the only reason why they would collect these large amounts of gold. And then you have the fundamental supply and demand situation, where all these metals are seeing production deficits, or many of them are seeing production deficits already, and many more will have production deficits in a few years' time. And I haven't seen one researcher or one report explaining me and the rest of the world how these production deficits can be solved, because we only have one planet Earth, and we as a fund are specialized in investing in new mineral discoveries and new metal discoveries, and it takes 17 years on average from a point of discovery to opening of a mine. So we have a structural problem, and Robert Friedland is pounding the drum on the same topics from a copper point of view. We know that Elon Musk proposed to do a live stream from Fort Knox. Well, how has that story ended? Everybody is silent about that, because everybody knows there hasn't been a full audit of Fort Knox since the 1950s, and all we have is some grainy color photos from the 70s showing actually nothing. So in our world of billion experts, there's huge doubt whether the US is still in control over 8,000 tons of physical gold. I think the repatriation trend will only get stronger, and this will add pressure, and this will add oil to the fire we are seeing, and this will help to further revalue gold and silver.
Gold is regaining strategic importance as central banks prepare for a global monetary reset. After decades of dollar dominance, massive money printing since the 2008 financial crisis and COVID has destabilized central bank balance sheets, increasing demand for gold revaluation. As gold's monetary role strengthens, this repricing is driven by market-led short squeezes, geopolitical tensions, and worsening supply deficits beyond gold and silver, creating a perfect storm for commodities as investors flee currency debasement. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.